Hello everyone, welcome to a breakdown on EU. In this video, I'll be breaking down a trade signal that I gave you inside the group on Monday. I'll go over the thought process behind it, how I generated that trade, and exactly what was the reasoning behind my higher time frame directional buys. Moreover, I'll explain how I built a market context around that setup and how I combined all of these different key aspects and came up with that trade, right? I'll explain all of this, all of those key aspects inside this breakdown. So let's get started with the breakdown by first of all looking at the weekly time frame. On the weekly time frame, you can see that since September, price had this huge expansion leg lower. And with this expansion leg lower, what price did is price came down lower to the discount region of this whole dealing range. And within this whole dealing range, it came down and tested this mitigation block, right? And along with that, it also tested this refined weekly fair value gap, right? And on top of that, we also had an SMT divergence with GU. Let's see. You can see that we had this low both on EU and GU. And what EU did is that it came down lower, took out this low, made a lower low, whereas GU failed to take out this low and made a higher low, which means that we had a discrepancy between these two correlated assets. And this discrepancy suggests that we have non-symmetry. And you know that when we have a non-symmetry, it means that the market makers are actively participating and we can expect an expansion or a reversal from here. And since we are in the discount region of this whole dealing range, and we've also tested this discount key level, we can expect a reversal from here after this expansion occurred. Right here, you can see that when we were inside the discount region and we tested this discount key level and had this SMT divergence, our job was to first of all determine where price might go next. And the least target that you could expect for price is a premium key level. And right here you can see that inside this premium region, the first key level that we've got is this weekly swing high, right? So when we were right here, our first point of target or point of interest was this swing high, right? This was the least we could have expected price to take out or reach to. And you can see that after all of these key supporting factors and these key supporting aspects, price reacted higher and pushed price right up until here. And after that, we had this small retracement rover again, and with that retracement, we tested this weekly fair value gap, and again we had another reaction higher up until here before taking out this high. Now this week we opened right here, and right around here my objective was for price to first of all take out this swing high and eventually this swing high, right? So my directional bias for this particular week was bullish, and I was expecting price to take out these swings high, and these swings highs were my drawn liquidity for price, right? So at this point my directional bias was bullish, right? I was expecting price to expand higher, or I was expecting for the weekly range expansion to occur to the upside, right? Now what I'll do is I'll take this idea down to the daily time frame to see if I can find any other supporting factors and whether this lower time frame price action aligns with my higher time frame bias. You can see that the weekly candle opened right here, right? And right here on Monday, I gave you the trade signal on Monday, which was right around here, right? I'm going to use this so it looks a bit clear here. On the daily time frame, you can see that we have the same narrative in market context. We had the SMT divergence with GU, and after that SMT divergence, price had this expansion higher, right? Now looking at this section right here, you can see that what price did is that it almost took out this swing high right? But before it took it out, we saw this retracement lower, right? And because of this retracement lower, we formed these equal highs around here, which led to even more liquidity being generated above this swing high and this swing high, right? And this retracement lower led to the generation of these equal highs, right? And this retracement ultimately resulted in equal highs being formed, right? Which made it an easy target for price to take out after this retracement ends. And with this retracement, you can see that we took out this swing low. And this tells us that we entered the kiss of death phase of this move, right? We had this last turtle swoop where price took out this swing low, and along with that, it tested this discount order block, right? So these were the two key supporting factors which led me to believe that price is now going to expand higher from here to first of all take out this swing high and eventually this swing high, right? This is the exact thought process that I outlined for you, right? And that I explained to you inside the weekly outlook, and you can see that price exactly did that, right? So you can see that on Monday price was positioned right here, and my expectation was that it would expand straight right away from this level, and it would target this drawn liquidity higher, right? And at this point, I had accurately determined both my directional bias and drawn liquidity from higher time frame perspective. And now the next step for me is to build a 4-hour market context and frame a trade idea on the lower time frame around that market context, right? So now let's go down to the 4-hour time frame and let's see how I built a market context around this trade. So this is my drawn liquidity. This is the swing low that we took out. This is the order block. And right around here, you can see that we tested the order block and then we expanded higher. And on Monday, the Monday candle opened right here and we formed this candle just above this order block right here. The reason this candle is an order block and I consider it is a valid order block is because price closed above this candle. And on Monday, I was expecting price to first of all take out this candle range low and this candle's low and to test this key level. And these two key aspects together built a market context for me. And then from here, I was expecting an expansion higher straight away. Right? I was also expecting price to take out this range low, this candle range low at a key time, which would increase my conviction in the trade idea even more. And you can see price exactly did that. It came down lower, took out this candle range low, tested the 4-hour order block, and it expanded higher. Right? Now let's go down to the 15-minute time frame and let's see what was my thought process. On the 15-minute time frame, you can see that we opened right here, and during the Asian session, we formed a ranging profile. We ranged and consolidated during the Asian session, which means that we formed an Asian range. And during the London Open kill zone or the London Open session, I was expecting price to form a Judah swing or a manipulation profile lower below this candle range low to test this discount key level and then an expansion from here. And you can see that this manipulation profile happened during the 3 a.m. key macro, right? Which is a key time for manipulations to happen or for candle range lows to be purged or key levels to be tested, right? And all of that happened during this 3 a.m. key time, right? And right around here, I expected price to straight away expand from here with speed, right? When all of these key factors align with each other at a key time, you must expect price to expand straight away from here with speed and with explosive movement, right? You can see right around here, I provided you with the trade signal and I outlined this order block for you. The reason I took this candle as an order block was because this is the candle that took out this candle range low, right? I was expecting price to test it and then expand from here. What instead price did is that it tested this candle or this key level right here, and then it expanded here, right? These consecutive four candles could also be considered an order block, right? Because by definition an order block is a candle or a consecutive group of candles which purges a candle range or purges a swing low or swing high or tests a key level. And you can see that these four consecutive down close candles exactly did that. It took out this candle range low, tested this key level. So these four candles as a whole could have been considered an order block, right? A refined entry would have been right here, but price didn't offer that, but instead it tested this order block and expanded right away from here for the rest of the day, right? This was the trade signal that I provided to you on Monday, and this was the exact thought process behind it.